This is the AI News Flash for August 14th, 9 p.m. UTC. First up, Anthropic has published its August risk report saying AI risks are rising and revealing it has no plans to release a new internal model it calls Model 2. Model 2 is the successor to Mythos 5, its cybersecurity-focused model. Anthropic says it is somewhat more capable than Mythos 5 on many tasks relevant to internal use, but does not show a capability jump on the scale of Claude Opus 4.6 to Mythos Preview. The company says it has not run its full suite of pre-deployment assessments on the model, leaving it with lower confidence in its understanding of the model's capabilities, which is a key reason for keeping it internal. The report covers the period from its February edition through July 15th. It flags early signs that Claude models are accelerating AI research and development itself and raises the assessed risk of model misalignment in high-stakes environments, from very low to low. It is a concrete example of a frontier lab disclosing, in a recurring report, a decision to withhold a model because of its capabilities. Second, Joshua Kushner, founder of Thrive Capital, a major OpenAI investor, has criticized Silicon Valley's AI euphoria in the firm's first-ever investor letter. In the letter leaked to Bloomberg, Kushner warned it would be a grave error to let excitement weaken investment discipline, and said the industry can become fixated on hyper-incremental technological turns. In contrast to the spray-and-pray model, Thrive concentrates about 90% of each fund's capital into its top 15 investments. The firm disclosed $60 billion in assets under management, a 41% gross internal rate of return, and 33% net. Its 2022 early-stage fund has grown from $516 million to over $3.7 billion, and the firm returned more than $1 billion to investors over the past 12 months, with major stakes in OpenAI, Anduril, SpaceX, and Stripe. Kushner concluded that not every fast-growing business is exceptional, a pointed call for selectivity in an overheated AI market. Third, a Massachusetts Superior Court business litigation session has ruled that AI-generated documents are not shielded from discovery as work product unless an attorney directed or was involved in their creation, according to a law firm analysis. In Sheely v. Seaside Investments, a plaintiff who already had counsel sent litigation-related documents to his romantic partner, who uploaded them to ChatGPT and returned the AI's analysis. He later claimed that output was protected work product. The court rejected the claim, emphasizing that AI is a tool, not a person. The partner did not qualify as a legal representative, and AI output created without counsel's direction does not reflect an attorney's mental impressions or legal strategy. The decision runs in the opposite direction from earlier rulings, including a Texas court that suggested AI conversations could qualify as protected work product, leaving states split on the question. The practical warning for companies and legal teams outsourcing AI analysis to non-lawyers can leave those materials exposed in discovery. Fourth, advocates rallied outside Madison Square Garden in New York on August 14th, calling for a ban on facial recognition technology under the banner Ban the Scan. Led by City Council member Shahana Hanif and the Surveillance Technology Oversight Project, the campaign backs two bills that would ban biometric data collection in retail stores, restaurants, and entertainment venues, and bar landlords from using the technology. Speakers cited a mother banned from Radio City Music Hall because she worked at a law firm litigating against the venue's owner, and noted that surveillance cameras were reportedly disabled for Taylor Swift's wedding, questioning the security rationale. Evan Greer of Fight for the Future said people should not have to give up sensitive biometric data just to walk into a grocery store. MSG pushed back, saying people have been recognizing each other's faces since the beginning of time, and the venue simply does it electronically. The fight over facial recognition in commercial spaces continues. Finally, China's largest chip foundry, SMIC, posted second quarter revenue of $3.01 billion, topping $3 billion for the first time, up 20% from the prior quarter and 36.1% year-over-year. With AI demand tightening semiconductor supply chains worldwide, the average selling price of its wafers rose 5.7%. Co-CEO Zhao Haijun said on the earnings call that SMIC raised prices after negotiating with customers in the first quarter and will charge more for wafers processed in the third quarter. Gross profit reached $760.6 million, lifting gross margin to 25.3% from 20.1%, Net profit surged 2.6 times, and third quarter gross margin guidance is 28%. Demand is driven mainly by AI-related chips other than CPUs and GPUs, mostly from China-based customers. Even under U.S. export controls, domestic AI demand is strengthening Chinese foundries' pricing power. That's all for this AI news flash.